Welcome back to The Explainer. Today, we are tackling a massive, absolutely crucial question that's been completely dominating financial news and blowing up our social media feeds. For decades, the US dollar has been the undisputed king of global trade, finance, and central bank reserves. But as we look at the landscape in 2026, there's this growing, very loud narrative that the dollar is on the brink of being dethroned. Our goal today? We're going to cut right through the sensationalized online chatter and use hard 2026 data to demystify exactly what is going on with de-dollarization.
So, let's just ask the question directly. Is the US dollar actually losing its global power? I mean, if you spend any time online at all, you've probably been served some dramatic doomsday-style content promising a massive global financial reset by next Tuesday. It seriously feels like every single week there's a new post claiming that the imminent death of the dollar is finally here.
And that brings us to a very well-established internet myth. The idea that the dollar is rapidly collapsing right now and is being swiftly replaced by countries like China or the BRICS nations. The whole story goes that emerging economies are just completely abandoning the American financial system, and the dollar's days are literally numbered. But as we're about to see, the reality of global finance is a lot more complex, and frankly, way more fascinating than a simple collapse narrative.
Okay, let's dive into this. Section 1. The dollar's global dominance. The unbreachable financial fortress.
To really understand if this fortress is crumbling, we have to know how it was built in the first place. The story really solidifies after World War II. Back in the 1940s, the Bretton Woods system officially placed the United States right at the center of the international financial order. Now, even after that specific system ended in the 1970s, the dollar didn't just fade away. In fact, it adapted, it thrived, leading us all the way to 2026, where it maintains its continued global dominance. But you might be wondering, why didn't it lose its spot when Bretton Woods ended? Well, a massive part of the answer comes down to something economists call the network effect. Think of this as a giant financial moat. The network effect is basically this phenomenon where a currency becomes increasingly useful and deeply entrenched simply because, well, more people, banks, and governments already use it. If every company you do business with uses dollars and all your banks hold dollars, switching to a completely different global currency is incredibly difficult, it's expensive, and it's super risky. It's the ultimate lock-in effect on a global scale.
So the absolutely crucial point here is that the dollar isn't just a piece of paper or a digital number on a screen. It's a massive, irreplaceable financial ecosystem. The whole shebang. The United States offers the world's deepest capital markets, enormous and highly liquid government bond markets, and major global financial institutions. When global investors need a safe, highly liquid place to park trillions of dollars, this ecosystem is just unmatched. You can't just replace the currency without replacing this entire infrastructure.
All right, Section 2, the 2026 Data Reality Check, Myth versus Math. Let's see if those internet rumors actually hold up against the latest numbers. And this brilliantly illustrates the real story. Looking directly at the International Monetary Fund's latest numbers for Q1 2026, we see the true state of the global economy. Out of approximately $13.1 trillion in allocated global foreign exchange reserves, the US dollar accounts for a staggering 57.13%. The euro sits in second at 20.03%, and the Chinese renminbi, it accounts for just 1.99%. To put that into perspective, the math visually crushes the myth that China has already overtaken the dollar. That gap is absolutely enormous. What's even more surprising for the folks pushing that collapse narrative is that the dollar's share of reserves actually grew recently. It went from 56.42% in the fourth quarter of 2025 up to 57.13% in Q1 2026. Now, to be perfectly transparent, the IMF does warn that exchange rate movements played a major role in this quarterly bump, so we shouldn't assume it's just going to climb forever, but it definitively proves the remarkable resilience of the dollar's global position.
Which brings us to Section 3, why de-dollarization is trending, seeking alternatives, not destruction. If the data is so strong, why is everyone still talking about this?
Well, this is where the BRICS nations, Brazil, Russia, India, China, and South Africa, enter the chat. And there is a huge online misunderstanding here. The myth spreading like wildfire is that BRICS is rolling out a single, unified currency tomorrow to totally replace the dollar. Honestly, that is practically impossible right now, given their wildly different economies and monetary policies. The reality is much more pragmatic. They are focused on interoperable payment systems. They just want to connect the systems they already have.
Let's look at how this builds into real-world action. Back in January 2026, Reuters reported this fascinating proposal from India's central bank. Their plan isn't to print a new paper currency. It's a step-by-step approach to link BRICS countries' official digital currencies.
This would ease cross-border trade and tourism, and crucially, it would allow, say, an Indian company to pay a Brazilian company directly. This bypasses the traditional US dollar infrastructure entirely. It doesn't destroy the dollar, right? But it means the dollar simply isn't required for that specific transaction. And we can't ignore another major shift that happened just last year in 2025. That was the year gold actually surpassed U.S. Treasuries as a share of official central bank reserves. Now, a lot of this was driven by a massive spike in gold prices, not just central banks frantically dumping dollars, but the trend itself is vital to understand. Central banks, much like everyday investors, want diversification. Gold doesn't depend on the financial system of another country, making it the perfect asset for nations wanting to hedge against geopolitical risk.
Now, what's really interesting about this next part is the twist. Section 4, the digital stablecoin twist, a surprising paradox.
When we talk about digital currencies, most people just assume they're a direct threat to the US dollar. But the battle of the future might not be traditional dollars versus foreign digital currencies. It might actually be digital dollars versus traditional dollars. You see, many of the world's major stablecoins, which are digital tokens on the blockchain, are actually dollar-denominated. They're backed by US assets.
Just look at this quote from the Federal Reserve's 2026 conference on the international role of the dollar. They noted, "Stablecoins are creating new channels for people and businesses around the world to access, transfer, and hold dollar-denominated assets." Think about how crazy that is for a second. Blockchain technology, which was literally created to bypass the traditional financial system, is inadvertently expanding the dollar's global reach. It's bringing dollar demand to populations that never even had access to a traditional US bank account.
So, where does this leave us? Section 5, a multipolar monetary future. Competition, not collapse. As we process all these moving parts, we have to look forward.
There are genuine risks to the dollar, for sure, mostly stemming from what we can call the sanctions paradox. It's a real double-edged sword. On one hand, U.S. financial power makes its sanctions extremely effective, giving Washington immense geopolitical leverage. But on the other hand, the overuse of those exact sanctions creates an intense fear among other nations of losing access to the global system. And the result? It heavily incentivizes those countries to build those alternative payment workarounds we were just talking about.
So map this out to the mid-2030s. What does the global ecosystem actually look like? Well, it definitely won't be a world without the dollar. The US dollar will likely remain the dominant reserve, but it will share the stage. The euro is going to have a larger role, the renminbi will see expanded international use, and regional currencies are going to have increased utility for direct trade. Gold will remain a diversified bedrock, while stablecoins act as this rapid digital dollar finance layer. It's a system with several major financial networks operating alongside one another.
Which brings us to our final takeaway. The question is no longer, will the dollar disappear tomorrow? We know the answer to that is a hard no. The real question we should be asking is, will the dollar remain as dominant as it has been for the last several decades? For the first time in generations, the rest of the world is actively preparing for more choices. The dollar isn't collapsing, but its era of absolute, undisputed monopoly is facing real competition. And that shift won't just change the global economy, it could eventually reshape how your investments and purchasing power behave in the decades to come. Thanks for joining me on this explainer today, and remember, always keep questioning the headlines.